I just can't stop taking dubs right now. There's so many wins had right now. I can't stop winning. I'm just winning. Microsoft stock up 3% after hours after a earnings report release, after being up 4.5% in the normal trading day. We're going to take a look at this earnings release, see what this company has going for it. Why is it up? Well, let me tell you why it's up. Because Microsoft Q3 GAAP EPS of $1.40 beats by 13 cents. That's a massive beat in terms of EPS perspective. But here we go. Revenue of $35 billion, up 14.4%. 14% revenue growth at $35 billion. That's right. Beats by $1.32 billion. Are you kidding me? They beat by nearly $1.5 billion. That's incredible. That is an incredible beat, both on an EPS perspective and a revenue perspective. Holy cow. What can I say? They're saying that there was minimal net impact on the total company revenue, according to Microsoft. Revenue breakdown from productivity, business, and productivity and business processes. They made $11.7 billion versus a consensus of $11.53. Intelligent Cloud 12.3. Holy crap, $12.3 billion versus $11.79. More personal computing, $11 billion versus $10.46. And withdrawn guidance, which they withdrew on it, by the way, was 10.7 to 11.15 billion. Intelligent Cloud featured a 59% increase year over year in Azure revenue growth. Of course they did, massive, compared to 62% growth in Q2. Just massive growth for this cloud platform, and they are pretty much the leader in terms of this. It's crazy. For more personal computing, Windows OEM was flat on the year, and service devices grew 1%. We'll get into this once we get it on the slides. In particular, if you give me just one. And as we talk from so far away, we will talk about what's going on when we get to the slides. So the company repurchased $9.9 billion worth of stock in Q3. Holy crap. Up 33% from a year ago. Good stuff right there. So let's take a look at these slides. What do they have to offer for me? That's right. Okay. We're just gonna rock it out. We talked about obviously the growth here, but if you look at gross margin, so growth overall and gross margin of 18%, very good stuff. Gross margin percentage was 69%. Operating income grew 25%, and net income grew 22% to $10.8 billion. Son of a gun. Printing money. What can I say? The impact of this, again, there is obviously supply chain constraints. The only real major thing going on here is in the more personal computing business for the most part, just because of supply chain issues, but nothing too crazy in terms of that. So it's from quarterly commercial highlights, commercial bookings growth. You saw this quarter, obviously not nearly as high as they have done. Commercial bookings growth of only 7% to 12% year over year. Nothing too exciting in terms of that. Commercial bookings grew, driven by healthy renewal performance on a modest expiry base, partially offset by high prior year comparable. So other financial highlights. So they paid out $3.9 billion in dividends, and they returned $6 billion through share repurchases. $6 billion they repurchased in shares. That's crazy. Operating expenses were up 10% year over year, driven by investments in cloud engineering and LinkedIn. And from other income and expense, was a negative $132 million, driven by net losses on foreign currency remeasurements. Effective tax rate of 16%. Cash flow from operations was $17.5 billion, up 29% year over year. driven by strong cloud billings and collections. Holy cow. Wowee. From quarterly business highlights, we saw Office commercial products and cloud services revenue increased 13%, driven by Office 365 commercial revenue growth of 25%. Office consumer products and cloud services revenue increased 15%, with continued growth in Office 365 consumer subscribers to 39.6 million. LinkedIn revenue increased 21%. Whew, crazy stuff there. You think so, because people are really trying to worry about contacts right now. In terms of getting new jobs, think of people who've been laid off. I mean, people who are out of work, furloughed, they're looking for new jobs. LinkedIn's a good way to give that a shot. You definitely need a LinkedIn portfolio if you're a professional business person, no doubt. Dynamics products and cloud services revenue increased 17%, driven by Dynamics 365 revenue growth of 47%. Server products and cloud services revenue increased 30%, driven by Azure's revenue growth of 59%. Enterprise services increased 6%. From a more personal computing perspective, we're starting from the bottom. Service revenue increased 1%. Xbox content and services increased 2%. Search advertising revenue, excluding traffic acquisition costs, increased 1%. Windows commercial products and cloud services increased 17%, and Windows OEM revenue was relatively unchanged. From the more personal computing perspective, I did want to mention, obviously they have some gains to be made here. If we're talking about Xbox, more people have time to game right now than ever. People are furloughed from work, out of work, they've got nothing to do, they're quarantined and left at home. So they have more time to game. We also have, that's right, this right here is going to change the way, permanently, of how business is done. That is one impact that I don't think people necessarily consider. We're going to talk about the fact that through this, more businesses are going to be going 100% digital in terms of a majority of their business. We're talking about meetings, we're talking about tours, we're talking about all of this stuff. It's going to go digital now, thanks to this digital age that we're kind of being forced into. There's going to be a lot of people upgrading their computer systems at home. They're going to be getting tablets for mobile. They're going to be getting laptops, stuff like that, and Microsoft seeks to benefit from it. So definitely exciting stuff there. From productivity, you see a nice chart in the bottom right, like we like to talk about. Very good stuff here. We talked about Office 365 subscribers. Look at this growth over the years, over the quarters, I guess you should say. In the past year, they've grown from 34.2 million to 39.6. Very good growth in terms of that. So from the productivity business here, we saw, let's move forward here. They're going to talk about the highlights here. LinkedIn sessions grew 26%, and you're going to see that continue to rise, obviously. So pretty exciting stuff. From the intelligent cloud perspective, just massive, just quality growth consistently. You like to see it. You really do like to see it. So, I mean, that's just consistent growth year over year, all over the place, consistent growth. Azure, you see constant, obviously the rate's slowing down a little bit in terms of growth, but you can't keep growing 70% consistently. So they're still in the high 50s. That's crazy. 60% even. Gosh, that's wild. So, very good growth in terms of the cloud platform. Personal computing, you see, again, it's a relatively flat segment for them. Not necessarily a lot of growth to be had in their personal computing. Not that much growth to be had. Nothing too crazy in that, though. So you're going to expect, obviously, an increase in other things there. But let's see if we have the access to this statement. We'll get right into this balance sheet, as you know we do, and see what kind of money they have going on. Forward-looking statements, obviously, they're not going to give guidance, as we expect. We don't expect guidance, but we're going to look at this balance sheet. We're looking on the left column. So from a total cash equivalents perspective, they got $11.7 billion in cash versus $11.3 billion as of 6 months ago. or 9 months ago. Sorry, it's 9 months ending, I should say. So, exciting stuff. So, total cash. Really, what I care about is here the total current assets of $170 billion. Whew, down a little bit from 9 months end, actually. Total assets in general, $285 billion versus $286 billion 9 months ago. So that's still money like no other. From liabilities, we're just going to go right down to the total liabilities line here. This year, they have $170 billion in total liabilities. That's versus $184 as of 9 months ago. So you saw a little bit of decrease in the assets, but the liabilities decreased around $13, $14 billion, closer to $13 billion. So, wow. Definitely a lovely balance sheet because you see over $100 billion. I mean, they're outweighing their liabilities by $100 billion. That's a massive balance sheet right there. A lot of cash on hand, a lot of liquidity for this company. They're going to be perfectly fine in all this, obviously. We're talking about $137 billion in liquidity. This company's massive, and this is a massive quarter for them. And they only seek, in my opinion, to benefit from all of this going on. So I think Microsoft stock's still a good thing to take a look at. I'm not saying there won't be short-term pain potentially down the road, as the whole market might, not be happy, but this company itself should do plenty fine. I'm definitely keeping a strong eye on this. I already have a decent position in it, but shoot, I feel like I should have bought more back a couple months ago, or a month ago, right? Well, hope you enjoyed.